Hello, everyone. Welcome to the Daily Trader. I'm Kevin Hincks. I'll be taking you through the next 10 minutes or so. We're going to give you a look at the macro market starting the week, and then we're going to look at two practice trades going forward. Big names, of course, both in the news today, Nvidia and Tesla. We'll trade both of those today. One has earnings coming up. One has constant news coming up, and that's Tesla. So we'll get into those. First, our macro minute. You know, we have an interesting week this week because we're going to get a look at inflation. On Wednesday, we'll get CPI. Thursday, we'll get PPI data. Thursday, we also get Jerome Powell speaking in the afternoon. Friday, we'll get retail sales. Those are three of the top 6 data points of the month that we'll get this week. So, and here's what could be a problem for this week. The CPI data, the expected year-over-year headline CPI data is expected to rise from 2.4% to 2.6%, right? The month-over-month, flat at 0.2. The year-over-year core inflation data expected to be flat again at 3.3% month over month. So if you're looking for a narrative where inflation is coming down, you may not get the news you're looking for this week out of the CPI data. So we'll watch that. That's coming out Wednesday, 7:30 Chicago time. Like I said, we'll also get PPI, a look at the prices at the producer level, and then we'll get retail sales, a good look at the U.S. consumer, as well as we look at companies like Shopify that we're getting tomorrow before the open. Home Depot, that's a look at the U.S. consumer. So Disney on Thursday, we'll get several looks at the overall economy. Those are the highest profile names. A couple others that I threw in there. Spotify is always one to look at. If you're looking at China stocks, Alibaba comes out with the earnings on Friday, but those are the earnings coming out for this week. All right, now let's get to our trades. The first one we're going to look at here is Nvidia. Now, Nvidia, the first thing we want to talk about is it's important that Nvidia has earnings coming out on November 20th. Now, if you notice, if you followed the Thinkorswim platform and followed the earnings of Nvidia, there was a little speculation. It might be the 26th. It might be the 20th. It looks like now it's verified for November 20th. And how do we know that? How do we confirm that right column on the Thinkorswim platform that has the aggregate implied volatility now spiking up to a 71% for the week of November 22nd. That's an indication right there that there is some event on that calendar for that week. It's the earnings event. You look on the Thinkorswim platform on the calendar, it'll show you that it's now verified. Nvidia also has news coming out today that Piper Sandler raised the price target from 140 to 175. Melius Research raised the price target from 165 to 185. Think about that. They went from $20 above the money to $40 above the money. And then Morgan Stanley raised the price target from 150 to 160. So 3 different firms all talking positively about Nvidia today. Yet the stock is down 1.8% this morning. So even with 3 upgrades and an earnings event on the horizon, Nvidia down today on the day. So a little interesting there. From an earnings perspective, from an options trading perspective, let's assume that you want to take a long-term bullish posture in a company like Nvidia. Well, what you don't want to do is buy that short-term elevated implied volatility name. But what you do want to do is possibly set up, if this is what you think about Nvidia, you can set up a longer term diagonal where you extend duration from this week into the event week where you're selling incredibly elevated levels of implied volatility. Take advantage of the dispersion between two, and I'll show you what I mean by that. So the first trade we're going to do in Nvidia is we're going to go out to December 6th, so a couple weeks out, and we're going to buy the 145 call right at the money, and then we're going to sell this week's November 15th 150 call. So the 145, 150 call diagonal. We put it in here at about $7.55. It's now trading about it's trading about right there, 755, 753. So this is a real good look. Now, couple things about this. if you notice, it's a $5 diagonal that you're trading for $7.50. That doesn't look like something that would possibly be profitable. But if you get a move towards the 150 strike by the end of this week, it could be as high as $15 higher. So this week, the move's about $5, right in line with where you're setting your short strike. Next week, when you extend duration by buying in this week's and selling next week's option, when you do, you get that big credit that you'll be rolling into, and that will take away some of that net debit on that diagonal spread. And when you do that, you lower the net debit, number one. You also lower your break even on that trade. All the while, you're collecting theta this week, and then you're collecting theta again next week in a pretty big way going into the earnings event. So you're not only trading the vertical spread within that calendar spread, but you're trading the dispersion between the two levels of implied volatility. So that's our trade for Nvidia. It's a diagonal spread. Now, let's get to our second trade, and that is Tesla. Tesla also has news out today. Wedbush raised its price target. How about this? Wedbush raised its price target in Tesla from $300 to $400, a 33% price target increase. Now, as you know, since the election, Tesla has run quite a ways. And the overall S&P 500 now trades at or near a 22.5 PE ratio. That is not cheap, not inexpensive. So there's always the risk when you get up these levels. Now, Tesla is overbought on an RSI level. It's currently sitting at, over 70 as we speak right now. It's trading at, it's an 80 RSI right now. So from a relative strength perspective, it is overbought. The implied volatility is sitting at a pretty high level, and as you can see, the stock has rallied in the last week 37% in Tesla. Now, as you know, Tesla can go for quite a ways, and this is a pretty big game changer. With President Trump now in the White House and the bet that Elon Musk made supporting President Trump, they could gain a pretty most favored nation status with the Trump administration and autonomous driving, AI landscape. Wedbush thinks that alone, those two sections of Tesla could be a $1 trillion valuation just on those two parts of the company. As you know, Tesla's got so many other parts of this company, robotics and robotaxi and energy and energy storage and charging. There's so many things that Tesla does. It's got a focus. We don't know how far it can run, right? But what we can play for is a big move. And that is, what I looked at here is something relatively short term, just out to the November 29th. Looked at the expected move to November 29th. That's 2 weeks, 18 days away. It's about $50. $49 is the expected move in Tesla for that period. But as you know, news can come out, news flow. It could be very positive, very negative. Though Elon Musk is a darling for many social media types, he's not necessarily the darling of the mainstream media. So you always got to watch for some type of hit piece or some type of talking to Russia, things like that. There's always news flow around Elon Musk that can come out. So you want to be prepared for a move in either direction. So the practice money trade I looked at here in Tesla was something like this. The long iron condor, the opposite of the range-bound strategy in Tesla. So I went out, like I said, to November 29th, bought the 370, 380 call vertical, only a move of $35 on the upside, even though the move out to there is $49. We're playing less than that. And then I also went out and bought, on the put side, the 320, 310 put vertical. So what you're doing here is playing for a big move in either direction, frankly. And what you're looking for, these are two $10 verticals. The net debit right around 560. I think it's trading a little higher than that. It's trading about 563, 565 is where it's trading right now. But here's the risk and reward on this trade. You're risking what you pay, about 565, 570 in that range dollars. right? And if the stock were to stay range bound during that period, during the next 18 days, you would lose the debit paid on this trade, which is 560, let's say, dollars. However, if Tesla were to make a move towards 380, if Tesla were to make a move on the downside towards 310, and frankly, you don't care which way it goes. You just want it to move in a large way, which frankly, it has already, in my opinion. Can it still do it? That's the trade that you're making. You think the movement in Tesla, the volatility can keep up. And so you're thinking you're spending $5.65 to hope that these spreads go to $10 over the next 18 days in one direction or the other, frankly. You're playing for a large move. This trade has risk with a lack of a large move. And frankly, Tesla's already made a large move. So it could stop, but this trade illustrates an example or a anticipation that Tesla will continue to move. Okay, so those are our two trades today: a long call diagonal in Nvidia and a long iron condor looking for a big move in either direction in Tesla. That's our daily trades, our daily trader trades for the day. Have a great day, everyone. I'll see you tomorrow with another edition of Daily Trader.